Good afternoon, everyone. This is Chelsea Clark from L&W Insurance, and we are here for your favorite part of the week, I guarantee, which is Ask an Agent. I was lucky enough to wrangle up today Jeremy Allwein, who is not only a commercial lines agent, but he is also our commercial lines manager here at L&W Insurance. And he has a lot on his plate. And one of his many duties that he takes care of for the office is he handles bonds, which you may not know is related to insurance. And a lot of people don't understand that those two things go together. So we're going to kind of dive in a little today about what bonds are and how they might be applicable to what you need. So little nuggets of information on bonds. We're going to pick Jeremy's brain.
Great.
So we're going to start easy then. What is a bond?
So, for all of you out there, a bond essentially it's a written agreement that basically states it's almost like insurance to provide against an act or a licensing requirement, or maybe it's even something to perform a paving contract for a contractor. There's thousands of bonds out there in the marketplace. And actually most businesses need a bond, whether they realize it or not. Those bonds can range in the form of an ERISA bond to cover protection for a company's 401k plan. For contractors, when they apply for licensure through a state, township, municipality, what have you, typically there's a bond requirement that goes along with that license. And for those of you out there driving down Route 1, you can likely see a contractor on the side of his truck, licensed, bonded, and insured.
Yes. I've seen that.
Yes. That bonded piece basically means that within their licensure, they have a bond. And the great thing about that is it provides protection to the consumers.
Okay.
So, if you're hiring ABC Construction to go out and do some HVAC work, and they don't live up to their licensing requirements, you can actually file a claim against that bond. We don't see it that much. The reality is companies that write surety bonds don't necessarily want to see a loss. It's a little different than regular insurance, because regular insurance, you expect to have losses. In the surety world, you don't want to see losses, because that means that something wasn't done.
Somebody didn't live up to their end of the bargain.
Exactly. So it is very unique. It's different from insurance. Insurance provides a contract to insure, a business or an individual against the chance of loss. Whereas a surety bond, it's actually a three-part contract. You have the principal, the person who's doing the work, the obligee, who the person is doing the work for, and the surety company. So three-part contract, a little bit different from insurance, but bonds have generally they've always kind of run hand in hand with insurance companies, just because of the fact that you have premium attached to it. You could have claims. There is an underwriting process. So insurance companies typically have a writing company that will issue surety bonds.
Okay. That was going to be my question to you, was what that link is between insurance and bonds, and why would they be under the same roof? But it makes sense because they have several of the same characteristics, so it makes sense for them to kind of be run by the same companies or handled by the same individuals, agents, professionals who understand those three portions of what a bond is. Same thing as an insurance policy. Okay. Yeah. So what is the most standard type of bond that you would see? Like, which of our clients or the average person listening in would be required to have a bond or would benefit the most from having bonds?
Yeah, so your typically contractors.
Okay.
They have the most needs from a bond standpoint. Whether it be a license and permit bond that attaches to a license.
Okay.
Contractors, they engage in large contract work.
Okay.
So there's really, in the bond world, you have essentially two different types of bonds. You have straight contract bonds, and then you have commercial surety bonds. The commercial surety is those license and permit bonds. It could be an ERISA bond that falls under that realm. Could also be things, even healthcare institutions need bonds. If they're issuing what they call DME, durable medical equipment.
Okay.
That's backed by Medicare, and they receive payment from Medicare. There's a specific bond for that.
Huh.
Auto dealers need bonds. Boat dealers need bonds. It really ranges. Every business out there actually could have a bond.
I was going to say, anybody providing a service really could benefit from having a bond to protect them and protect the consumers.
Yeah. So
and let me ask this question. Does that kind of encourage consumers to want to do business with somebody who is bonded because they know that there's some sort of guarantee and protection there?
Absolutely. That would be, you can read online when you're trying to find a contractor, you want to make sure they're bonded.
Okay.
Because two things with that, especially that means they'll live up to their licensing agreement to complete the work.
Good.
If they don't, there's protection there against you. If they walk off a job, you can file a claim against that bond. So the other thing you want to look at too from a bonded standpoint is there's specific types of what they call third-party theft bonds.
Mm-hmm.
So if someone's coming into your home to do work, you hear it all the time about companies coming into people's homes and an employee steals jewelry or whatnot. That bonded, you want to make sure that those contractors are also bonded.
Okay. Well, this has been a wealth of information, and I truly didn't know that much about bonds before we sat down here today. So I'm very thankful for you letting us pick your brain on that. And from a consumer standpoint, it does make sense to look for service providers that are bonded, licensed, bonded, and insured. That actually means something we should be looking for.
It does.
And for business owners, taking on the onus of getting yourself bonded obviously speaks volumes to consumers, and we have experts here like Jeremy who can walk you through that process and make sure that they get you in with the right company with the right specific bond that's going to benefit you and your business. So thank you very much for helping enlighten all of us on bonds this afternoon. We hope you all have a wonderful Memorial Day weekend, and we will talk soon.
Thanks, everyone.
Bye.